The unfairness in the distribution of wealth needs to be changed by yourself. This mental model might change your life. 6 times double up and stop. Hi, my name is Till and this is the channel that shows you how to invest intelligently and easily and how you build up a fortune also as an ordinary person with a normal job. When you're new here, hit the subscribe button and ring the little bell for not missing any new videos. Saving $15,000 or $20,000 or euro in cash is quite a stretch for a lot of people. But it is actually not impossible for many. I know when you're maybe working in a job that is not well paid, this sounds like a huge amount. Especially when you're having a family that you have to feed and you're just getting by. What seems to be completely off the chart for someone with an average or even below average paid job is the possibility to ever become a millionaire or to retire early. This video is supposed to give you another angle on this. Both targets, achieving a fortune of $1 million and retiring early, are not impossible to reach for most people. I call this approach 6 times double up and stop. Let me show you how it works. The first step is to save the before mentioned $15,000 or $20,000. I know that this is hard for many and might take some adjustments in your life. For some people, this will take much more time than for others. But I will create more videos for this channel that help you with exactly this. Remember, even more important than learning to invest is learning to save money. That's the start of most fortunes. For now, let's assume you can achieve the $15,000 or $20,000. And two more things on this topic. You can of course apply this model also when you saved less than the $15,000 or $20,000. The outcome will just be smaller. Don't get scared of high numbers. It's more important to just start with saving. You will become better over time and accumulate more per month. The other thing is, make use of the time until you saved enough money to actually start investing. Learn to save more and better. Learn how to invest. Practice investing, for example, with paper trading. Step 2. The basic idea of this mental model is to break down the investment process in several steps that are much easier and more likely to achieve and stretch it over some time. Of course, finding a stock that develops from $20,000 to $1 million is extremely hard to find, and honestly, this might be more an educated gamble than a sound investment. But doubling your investment is much more likely than you think. When you would find a way to double your investment from time to time, both targets become all of a sudden much closer. You start with $20,000. The first doubling will bring you to $40,000. The second doubling will raise your capital to $80,000. After the third time times 2, you will have $160,000. Fourth time, $320,000. Fifth time, $640,000. And sixth time, $1.28 million. So, when you would have a way to safely double your investment, you actually just need to double it 6 times to achieve a capital of more than $1 million. This looks all of a sudden much closer, doesn't it? I know. The math is so simple that probably a kid in 4th grade would have been able to calculate it. But this is obviously not about the math itself. Step 3. Let's have a look at the topic we just parked. The doubling of an investment. You don't need to be a finance or a stock genius. All it takes is a lot of patience, time, and some preparation. The fluctuation of stocks happens more often than you think. One of the best examples of the recent past is the stock market crash of the Corona crisis last year. This was like fishing in a barrel. Even very big companies fluctuated significantly. there are a few effects that can cause these kinds of situations. Two of them I explain in my videos on the triple down effect and the avalanche effect that I'm going to link here in the corner. Those are the two special situations that happen from time to time and that offer huge chances. Remember, you cannot predict when the markets go crazy, and you will not know in advance why, but it will happen. And for this occasion, you need to be prepared. In his 2016 letter to the shareholders of Berkshire Hathaway, Warren Buffett wrote, "Every decade or so, dark clouds will fill the economic skies and they will briefly rain gold. When downpours of that sort occur, it's imperative that we rush outdoors, carrying wash tubs, not teaspoons." In between the market crash, you can look for a crisis situation of specific companies or industries. They happen more often as there are obviously more companies than markets. But you have to put in much more work and diligence. You have to choose for yourself how much work you want to put in investing. Achieving extraordinary results will require extraordinary workload. Just waiting on the sidelines for the big market crashes is definitely a more relaxed strategy, but it will still provide quite satisfying results. Step number 4. Now we only need to answer the question on how to retire early. For that, you can of course just continue with the method and practice you used for doubling your investment. There's a lot to the sentence, never change a running system. But there are of course other ways to do this that maybe offer a more continuous return on your investment. One of these ways I already discussed in the video on how to build a fortune as a normal person. The link is as usual in the corner. You could put your money, or a significant chunk of it, in an ETF, maybe in one that invests in a widespread global index like the MSCI World. These funds develop roughly with the development of the markets, while charging only very low costs, as they are not actively managed. In the past decades, the markets developed with circa 7% per year. 7% on the fortune of $1 million means that you're going to live off circa $70,000 per year before tax, which translates into a monthly pre-tax income of $5,800. The difference to a pension from the state is that after living a long and relaxed retirement, there will still be your fortune of $1 million that you can then inherit to your kids, as you just lived off the returns on your investment. There are of course still effects like taxes and inflation that have to be considered as well, and that will make it a bit harder to achieve your goals. But on the other hand, depending on the crisis situation, sometimes you will be able to achieve even more than just the doubling of your investment. I'm looking forward to your comments on this and your opinion. Write your comments and opinion in the comment section below the video. If you like this video and if you want to know more about investing, hit the subscribe button, ring the little bell for not missing any new videos, and it would be great if you also leave a thumbs up.